Hey, what's up everybody? CryptoVatsik here with another technical analysis video for you. If you enjoy this content, I'd really appreciate it if you hit that like button and don't forget to subscribe. As always, nothing of what you're about to see is considered financial advice and they're just my opinions. Let's get right into it. Okay, today's going to be a video on Mana, otherwise known as Decentraland. And all the illustrations you see on the chart currently are from that previous video that I shared about 2 months ago, and I'm just going to bring back a snippet from that video to show my trade plan and what happened. Okay, so here's that snippet. My expectation was planning for the worst and hoping for the best. And on the basis that we could not provide a breakout above the red supply zone here as resistance, and on a failure to hold the previous range high here on the solid line, my expectation was that we would drop to the mid-range in the dashed line here around 27 cents. So let's flip back to the current chart now. So you'll notice almost exactly that happened. We were not able to break the resistance in red, and we were not able to hold the macro range high on the solid line here. So what happened? We swept that range EQ at just over 27 cents. And I'll show you the bottom structure that I was hoping to see up here that we eventually got down here. So let's drop down to the 4 hour. Okay, so we had this range that at the time looked like we had broken above. So we were dropping around in resistance, and I had drawn this squiggly saying so long as we hold that range high, I'm happy to target higher. But ultimately we got our invalidation right here when we broke below the range high and we were unable to reclaim it. Then the next macro invalidation was a failure to hold the 38 cent level, which is that prior macro range high. And so my expectation is that we would come back down and sweep that range EQ in the dashed line down here. Now, what's the difference down here than what we saw up here? There's a few really key things that you have to look for. The first one being we had an established low over here. We dip below the low, but then almost immediately reclaim it. So that's your first trigger. The second trigger is a market structure break of this previous lower high with a fresh new high and bullish retest of that level. So if you're seeing just this price action here, this should be enough evidence for a temporary trend reversal at the least. With our low established, deviation below the low, reclaim of the level, market structure break with a new high. Then what was my next major trigger? Well, of course, for one, we started to form a trend, but the next major trigger for me was a reclaim of a macro level, which is in the solid line here at 38 cents. That we talked about. And let's zoom out to the daily to give a better picture. Okay, so here we are in the daily, and you'll see we interacted with that previous resistance in red with an initial rejection, sure, but ultimately what I was wanting to see is a reclaim of this macro range high from that prior range that I had shared in my previous video. So this guy right here that derives from that consolidation that we had way back here in 2021, and lining up with this range that we had from this swing high in April down to the swing low in June in 2021. So essentially it was a reclaim of two levels, prior macro range high and a prior macro range low. So that was definitely the ultimate trigger for me that this move meant business. And when you zoom out, essentially to me what this looks like is a mean reversion back to the mean, with the mean being the range EQ of that prior range up here in the dash line around 80 cents. So you'll see, okay, sure, we came up, we visited the range EQ here as resistance. But you'll notice this low that we made back here in May 2022. It took quite some time for us to revisit that low, about 154 days until we revisited that low again. So in my opinion, currently that is a pretty key level to be holding. And so let's just go ahead and mark out that zone. So it's no different than that previous macro reclaim I covered right down here when we reclaimed that range low and the previous range high at 38 cents, ultimately making this price action down here more or less irrelevant at this point because we've reclaimed that level and we're trading back inside that range. Now, essentially, all I'm seeing is another major reclaim of a prior low. It doesn't have to be a range high or a range lower or an EQ, but this was definitely an established order block of sorts on a high time frame. And we are pinching between resistance of that range EQ and what is that reclaimed level in green here. And I'm gonna mark it out as the directional control point. And I call it directional control point because I think if we hold above that level, we're likely to see continuation up to the range high here. And on the basis that we lose that level, the bears, in my opinion, are fully back in control, and who knows how low we go. And the confluence I have with this level comes from that low that we made back in May until it was revisited again later in October. But also, if you just zoom out, you'll notice, if you drag it across to historic price action, you'll notice that in the past, it's acted as a pretty key level as well. Right here, bouncing a support, a reclaim here, and then bouncing a support, and then of course a double bottom here within it, and you can see what happened on a hold at that level, what happened there. So it's just a matter of finding confluence with levels that you choose to trade with. Okay, let's get rid of this lower range down here for now. Okay, so like I said, you hold this low in green. I think we see continuation higher, but on a break below green, it doesn't mean we necessarily see new lows. If this starts to correct a bit deeper. So yes, on a loss of green, I think the bears are back in control on the shorter time frame at least. But if you look at this from an Elliot Wave count, so if this is our first wave of a larger 5-wave structure, and we do get a larger pullback on our wave 2, then I would expect a wave 3 to come up, and then possibly with our 5th sweeping the range high up here at around $1.65. Let's take the fib extension and find the target for a wave 3. Assuming this is our top of wave 1, and we do end up correcting deeper, you'll notice our wave 3, 1, 2, 3, would be a sweep of these prior highs, which would line up exactly with a 1-to-1 extension from our first wave. And that would be a perfectly healthy correction. If we take our fib retracement tool, we look at where's the 618 retracement right here. So a perfectly healthy retracement. However, on account that this may not correct as deep, if we were going to get a shallow pullback and my directional control point does in fact hold, then all it means is that our target would be slightly higher. So you take your fib extension again from the low to the high to your wave 2 retracement level. Whereas the 1-to-1 extension, it is now slightly higher, but still ultimately a sweep of these prior highs, providing an almost 80% move, potentially with your 5th leg either being a sweep of that range high, kind of a blow off the top scenario where we get our macro correction thereafter, or potentially it looks like more of an SFP, making a higher high, but ultimately failing. So from an Elliot Wave count, if this is our first impulsive wave, I could see something like that playing out. So personally for me, I'm looking for longs. I think dips are for buying on Decentraland, and I think so long as this green directional control point level holds, I'm interested in targeting higher. But the key being having that invalidation point. If we lose green, like I said, and we get that deeper correction, I will need to reevaluate to get some sort of bullish structure again and see that 618 level hold, and possibly from there we start our 3rd leg. But for now, hold green, it could get front run and we just continue to push from here. It's the first time as well that we're starting to toy with the exponential moving averages, trading above them, since all the way back in March 2022. The gap between price and the averages have been significant for quite a while, and we'll just go back to a previous time that we started to trade above them again. And though the environment was different here at the time, once we were able to reclaim the moving averages and consolidate above that level, we had a pretty decent push up until we mean reverted back down. So in my opinion, it's very possible that this could have more left in the tank if we can continue to consolidate on those moving averages and get a nice next leg up before mean reverting back down. Okay, let's drop down to the 4-hour on some lower time frame. I'm going to get rid of that high time frame directional control level in green here, as well as the macro range, just to clean up the chart. So another way of looking at this from an Elliott Wave theory for a correction cycle is if this was the top of that first leg, then of course, as everyone knows, you get some sort of ABC down. But the ABC corrective structure can take many forms. You can get a regular flat, you can get an expanded flat, or you can get a running flat. So if we get that shallow correction and we hold this low here at just over 60 cents, and price does not initially break this high, and we do something like this, then it could potentially form a regular flat, or possibly an expanded flat, or possibly a running flat with a slightly higher low in comparison to this low. So it can take many forms is my point, and you need patience to wait for it to play out. All these flat corrective structures would be in line with that shallower retracement on a hold of my directional control point level at just over 60 cents in that green zone that I had shared previously. And like I said, if we don't hold it, then perhaps we just get a standard ABC down toward that 618 level, closer to 50 cents. But so far, the data is not telling me that that's going to happen. That's why we drill into the 4-hour lower time frame here. We have a breakdown area here reclaimed. We've got our range high and we've got our range low, with the EQ still playing resistance. Here in the middle, you can see lots of interaction with it as either resistance or support or deviations. This reclaimed breakdown level also is in line with our bullish order block. So where's the bullish order block? It's the last down candle invalidated by an up candle that breaks market structure. So here's our H4 downtrend at the time. We have our down candle invalidated by an up candle that broke market structure. So there's our bullish order block. And what happened? We came into resistance and a beautiful retest of that bullish order block as support, and quickly reclaimed the 200 exponential moving average in the thick gray line here. So still signs of strength. So perhaps we chop around some more within this range on the H4 time frame, playing into the bigger picture of the macro correction that I had shared on the ABC structure. But ultimately, like I said, that directional control point, meaning who's in control, being at just over 60 cents, which was that macro reclaim of the prior lows that we had, if you remember. So I think above that level, bulls are in control still. So like I said, I'm looking for longs. I'm looking for bullish order blocks to go long. I'm looking for continued strength. I'm looking for a reclaim of the range EQ. I'm looking for a sweep of the range high. And I'm looking for this low to hold to complete some sort of ABC corrective structure. So in the meantime, you can trade the range from the low to the EQ, from the EQ to the range high. There's definitely gains to be made there. But from from a macro standpoint, I think higher is definitely possible so long as we're able to hold this bullish structure above my directional control point in green. So just stay safe out there, have your invalidation levels. It's okay to be bullish and to just take longs and take some risk on these dips, but have those levels of invalidation. And if you get invalidated, then come back to it, clean up the chart, and just reevaluate. Because if the trade for wave 3 is not here and it just ends up being down here, that's fine. I'll take it from down there. But the key point being is that macro target. If you do think this is going much higher, the target or the destination should be the same. But what you don't want to do is enter along here, not have a stop loss, and then you're down here trading, watching price, hoping for it to make its third leg up. Because you could be sitting, you know, some pretty serious underwater positions around 30%, say, and then maybe Bitcoin tanks and we're not able to get that momentum back. And then this is obviously at that point just a short squeeze and we're back down to the range lows and you're sitting underwater. So use stop losses, manage your risk accordingly. Know when you're wrong. Every trader is wrong at some point, but the difference is how you manage your risk. Anyways, you guys, thank you so much for joining. I really do appreciate all the engagement, the likes and the comments. Let me know what you think in the comments. I want to hear from you. Are we headed higher or are we coming back down to the lows? Please give the video a like if you did enjoy this. Don't forget to subscribe to the channel. And as always, you can follow me on Twitter at CryptoVatsik for frequent updates. And finally, if you're looking for a new place to trade, definitely go check out MEXC Global. They're offering some pretty serious rewards. You can hit the link in my bio or head to mexc.com/landing/Vatsik as I've recently partnered with them. Otherwise, happy trading everyone. We will see you soon. Peace.